you go. It's the 9th of June. It's Thursday. Joe here with you with Maverick. Let's get into a market roundup. As the market spilled off into the close, I've got my 2 cents. I've got my opinion. Make sure you take it for what it is and follow your own risk parameters. Trading plan, outlooks, you guys get the deal. Take responsibility for the outcome. So let's get into a market analysis because things seem to be the same as we've seen over the last few days until the last couple hours of the market. Now, I couldn't really put my thumb on it. However, we did get some pretty interesting numbers. A couple that I don't see very often, that we don't see very often, I should say, year to year to year. The household net worth and debt. So there's real household net worth and real household debt. I think a lot of these numbers take into consideration the average that a family or a household would hold in the markets. But we got this really big push-pull here. So household net worth actually decreased while debt increased. And so what's tough about these numbers is, they're kind of diluted and things. But at first look, when you see, and you can see what the stock markets have done, and a lot of net worth could be not only built into the price of the house or what the ownership of, but also some of the holdings in some of the average 401k, so on and so forth. And just what the markets have done over the last few months, you could see that it would probably put a dent in that. At the same time, the debt increase, more activity on credit cards could be inflationary, and also due to a lot of the stimulus and government programs that are expiring that have gone past over the pandemic. So yes, things might be getting a little bit more expensive and a little bit less of that residual stuff. So I think that kind of shook things up because that did come out midday, but it really didn't start to slide till like the last couple of hours. And I did get an article out there saying that a little bit of worries about that CPI number. Now, it is expected to come out at 0.7, which is a pretty strong uptick from the previous 0.3%. So a little bit hotter than expected on the consumer price index. Once again, folks, this is an inflationary gauge. We could also pair that with a higher than expected unemployment number. That was pretty interesting, I thought. That kind of made me scratch my head. Doesn't mean it's doom and gloom, but we're in a situation where these markets are super reactionary. And there is a lot of reactionary fear out there. I like to refer to it as froggy. We'll get to that in a minute. So how did we fare? Well, Dow, the S&P, the NASDAQ down pretty decent numbers. Folks, these numbers, almost 2% on the Dow, the S&P just over 2%, and 2.75% of the NASDAQ. 3/4 of that came in the last couple of hours. So this was a pretty good spill off into the close, a pretty good general sell-off. Looking at the heat map, we'll get there closer. Even oil and gold slipped a little bit as well. So let's just jump into the first chart here. And you can see we have what is referred to as a Marubozu candle. This actually closed on the low with an uptick in volume. So it is really ominous, considering that we've had this nice 4, 6, 7 days of kind of bouncing around, choppy sideways. We discussed that, hey, if nothing really rears its head and fear can sustain itself, we'll probably chop around through this area the rest of the summer. Today doesn't look like it. Now, we could get an immediate candle going right back up tomorrow with a better than expected CPI number. That CPI number comes in at 0.7, 0.6, 0.4, less than expected. It could just flip this on its head and these markets could go back up. It is super reactionary, which makes it very difficult to trade. However, what we have today is a very bearish looking candle into the close with increase in volume. Now the Qs did pretty much the exact same thing. Both of these are actually breaking below their 20-day moving averages, which changed my outlook because my top-down approach is pretty simple. But what I did see is everybody participated. This just a dump out of everything. Home Depot hung in there. Most of the stuff that I'm seeing was news. So Costco up there in the top right, Costco is talking about raising their annual fee, and if they raise their annual fee, it's expected to generate a lot of revenue for them, so on and so forth. So they didn't get beat down. Dollar General actually had some pretty good news as well, doing kind of the same thing. So all these little green ones I actually looked up, well, a couple of them, and there was news associated with it. Everything else, you're on your own. Just got sold off and hard. Amazon 4%, Google 2%, Apple 3.5%. Now this came in the last couple of hours. So I don't know if this is something to begin with or if this is a bunch of investors or traders that just don't want to be in the markets based on what could be a shaky CPI number. Maybe the CPI number comes out higher than expected and it creates more selling. So right now it's too early to tell. I think it's kind of a flight to safety, but it did create an interesting pattern. And folks, I have to go to a -1 on my monthly outlook and weekly outlook as well. Below the 20-day moving average, it was above it this morning. Now it's below. It's below the 50. It's sloping down. It's confirming a high base, or I should say a low base breakdown. I can't see the slope quite yet of that 20-day. You can see that big red candle's in the way, so I'm going to assume it's flat for now. I really want to be -2. I really do, but I'm going to base it off my chart and my technical analysis, so I'm never going to -1 today. Now tomorrow, I could see us gap down, trade back up, maybe we get a good CPI, and race back up above that 410 level. We'll see. However, I'm a glass half empty person based on what I'm seeing in the markets and the overall trend. I imagine that we roll over a little bit. Maybe we gap down, come back up, and just kind of park. We'll see. It is a Friday. It's also very difficult to carry anything from a Friday into a Monday. But, it is for what it is. There's stuff to be traded out there. Now, any of you bears out there, just stay bearish. Any of you bulls, this is what I have. Nothing triggered. That USO is just gone parabolic. Let's just take a look at it real quick. We'll jump to the other ones. Actually, you know what, folks? Let's just go back because I do want to talk about some of those potential bearish trades because they do look really good. Deere looks good. Amazon, GoPro, these are rolling over. A couple of these folks as well. If you can't find good options prices in them and they're lower in cost, there's nothing wrong with shorting stock. I had that conversation yesterday in my Wednesday class with a trader saying, I'm thinking about doing these options or maybe just going outright on the stock. You don't have to play as much volatility. You don't have to worry about too much worries about the bid and the ask spread because, stocks will trade up and down. So it's usually going to be, 5-6 cents apart. So it becomes much easier to deal with if you're truly looking for a direction to the downside for a short term or a short term bounce, so on and so forth. It's easy to get in, it's easy to get out. And if you're talking about stocks that are $6-10, somewhere around there, it might be a better choice. So that's what I had on the bear side. They're pretty decent. Okay, let's jump into the one bull. And it's just because of what it is. Oil has gone parabolic. I didn't check the number. Sorry, folks. We're at 120, 121. I believe yesterday or today a barrel. And I don't think that's coming down. Absolutely not. The consumer's still consuming. We're getting into the heaviest traveling season of the year, at least the U.S., and nothing's changing. So I don't see that doing much more than going sideways, if not continuing higher. That's about it. Everything else that looked bullish has a pretty mean red candle today. If you guys want to go through your bull watch list, I did, and I found a bunch of red stuff. So nothing really made it. Now on the sideways side, we can really test our theory of, hey, this could be an initial panic sell-off, which tries to flush people out, and then the markets turn right around and we go back up. Well, XYL here is still within that beautiful range. 90-80 if you want to go wider, if you want to go tighter, about 80-85. We talked about this 3 days ago, saying that it's on the upper part of its range, but it could actually retest the 80. This is a nice range-bounding stock, and it has been through March, playing it between the 80-90 level. So if you've got the gumption, if you're not too bearish like I am, you believe that we could probably recover the majority of today's loss tomorrow and get a little bit more optimistic on Monday, this would be an excellent trade to the side. We also found 3M. This one's really neat. Now this appears to be, let me get my pen, a descending triangle pattern of some sort. Why I'm a little bit reluctant on it, because it's kind of this top here. Folks, that is supposed to be a line. It's not, but you still get the point. Let me get the pin that has the line on it. But this is kind of sloping, isn't it? We do have a strong level at the 145 mark, but my range is actually down to the 140. This is kind of what I'm looking at here, is between a 150, 140 area. So 3M still looks like it could hang in there. However, if these markets decide to roll over and fall apart, then that descending triangle to the 140 could be a decent bear target if you wanted to go short-term bearish. But it still holds true in the long term within a range. If you think that the markets will bottom out again, or this is just kind of a hiccup come Monday, and then play this game moving forward. I ran out of space there, folks, but basically respecting that 140 support level. and then we could see things move sideways from there. The other one is BWA. This was from class, I believe, a couple of days. Well, it was last week. Last week as well. We talked about it. If not last week, then it was yesterday. It was last week. And this was actually revisiting its higher end here at 40, and it spilled off, but not very aggressively. So it's still within that range of 40, 36. We've talked about this once or twice. It could be establishing something a little bit higher now that it is above the 20 and the 50-day moving average. So if you wanted to play something basing sideways that could break above the 40 with some strength in the markets, by all means put that down on your bull watch list. I think that's a little far-fetched, just kind of based on what the markets are at. And you guys, we trade the markets in front of us. So let's jump into some pairs. Deer looks great. It was a nice move after a gap down there, end of May. Rallied right back up to the 360 mark. Had a little bit of a push and pull game the last 3-4 days, and looks like it's rolling over. This is the type of stock that will gap, and it'll gap down. It's very difficult to catch this thing when it comes to directional trading. You could be correct. You can see how fast this thing likes to fall. When it falls, it's usually in a gapping motion. It doesn't give you many days to get into this thing right before it just turns around. So I imagine we might see that here. I hope not. The best way around that is like a targeted butterfly. In fact, folks, if you guys want to review today's live trade lab, we talked about that specifically. I've got the chart coming up here in a second. Or something diagonalized. So if it feels like it's extended and it's going to bounce first, you can take the profit off of the target that you sold in the short term and still keep a nice hefty, or I should say juicy put that's in the money to roll over for continued gains. It is difficult to catch these as they fall, but I want you guys to understand you can still catch them. It just depends on the strategy you use. All right, so let's move on to Amazon. Amazon is one that Corey was talking about a couple of days ago. He says it hadn't triggered yet. Boy, hopefully he got it today because it is doing really nice. Nice rollover. Wanted to yesterday. Looks like we got some follow through today. The volume on it about equal to yesterday, but with continuation. I could see this hitting the 110 mark, even rolling towards that 104. What do we want to call this down here, guys? Maybe 104. We could see a little hesitation on that 20-day moving average, but if this is indeed where the markets kind of spill over, we get a bad CPI number, I see that maybe we go weaker into Friday, and then Monday morning we gap down, and maybe we could retrace from there. It just depends on the sentiment, I should say, of the overall markets, right? So still looks really good. Great trade, something to look at tomorrow. This is the trade we got into today with our class. It wasn't looking too good when I was working on it. It was actually kind of a green candle moving to the upside. This is a 235 targeted butterfly. We ended up going with a 230, 235, 240 targeted butterfly. The cool thing is we were discussing it, and I actually purchased it somewhere up around the 245 level. This is a 50-cent cost on a targeted butterfly. Yes, very low probability, very aggressive, very high reward to low risk, but that is my style. As I explained in the class, there's different types of style. Unfortunately, you guys have to sit there and listen to mine. This is a 50-cent risk. I think I did a 9 by 18 by 9 for a possible $4.50 gain. So it's almost a 10 to 1. I think it's just shy of it. I think it was $4.50 risk for $4,000 gain. So almost a 10 to 1 risk reward. We talked about targeting it. If this thing hits tomorrow or the next day or Monday, we can take a third of it, 2/3 of it off the table, let the rest go, so on and so forth. But it's looking really, really good as of now. However, you guys know how the markets work. This could change tomorrow. Tomorrow we could be up 2% across the board. So let's just talk about what I saw today. Definitely signs of a froggy market. Doesn't take much for these traders, I should say, or investors, whatever's moving the markets right now, to really react. And whether it was the real house debt or real house wealth, net worth, or worries about a CPI being hotter and not wanting to be in the markets over the CPI number, I don't care. There was a definite move out of these markets over the last 2 hours. Something scared them. We'll see if that continues in tomorrow. So it is definitely inflationary based. The CPI is tomorrow already creating a little bit of push and pull. Rumors, so on and so forth. And rumors are pretty powerful if you let them be. And these markets are definitely susceptible to reactionary trading. So earnings reports tomorrow, I didn't see much of anything. I just pulled the couple companies that I know of. Fuel cells tomorrow. DocuSign, I believe, is Friday after the close. Real fun point to the side, folks. Fuel cell was something that I traded back in 2000, 2001 for, I believe, $600 a share. It is now just above 4. No, just below 4. It's $3.90 a share. So if you don't believe that a stock that was once $600-$700 had fuel cells that can't go down to $2, $3, $4, there's your great example. Now, they did have a lot of reverse stock splits as it was going down, which just makes things worse. I think once it started, like if you had 1,000 shares, it reverse split itself down to where your 1,000 shares were 41 shares. Is what article I was taking a look at before this class. So things can fall from grace very aggressively, and there is no bottom. Keep that in mind. I don't know if these earnings reports are going to have too big of an impact on the overall markets. Just beware that they might impact the trade that you're looking at that time. All right, guys. Well, thanks. Going to be an interesting day tomorrow. Let's see if we flip-flop back and try to gain some of this move to the downside, or if that CPI number is as ominous as the markets are acting like it's going to be, and we go further down. Thanks for joining me, and we will see you next time. Bye-bye, everybody.